let's move on. Let's talk about Apollo Hospitals, and that number is flashing on the bottom of your screen. He's just come out with his numbers, and if you look at the numbers, if you look at the revenue, is higher by about 16.4% on a year-on-year basis. Also, if you look at the profit, is coming low by about 46% on a year-on-year basis, and that's one of the reasons why you may have seen the sharp knock in the stock price, but it's trying to recover from those levels right now. If you look at what the margins are like, the margins have come in at around 11.5% versus 12.9%, so it's a dip in the margins as well. 141 basis point dip coming in for the margins on a year-on-year basis. If you look at the numbers in comparison with ET Now poll, if you look at the EBITDA is in line, the margin is in line, but PAT is slightly below ET Now estimates. But yes, if you look at the way how the numbers are panning out, PAT is coming lower as well. 45% downtick coming in PAT on a year-on-year basis. If you look at the healthcare services revenue, was at saw an uptick of about 13% on a year-on-year basis. The self-pay and insurance segment saw an uptick of about 21% on a year-on-year basis. If you look and see on your screen, Vinny, the stock definitely after that first initial knock is now seeing a recovery. We'll just kind of refresh that graph for you. It should be higher by about 0.8% right now.
Surely, you know, keeping an eye out on Apollo Hospitals over there on the back of its numbers, keeping an eye out, the stock is surely seeing a bit of a recovery as of now coming in as well. So let's keep an eye out on that one. Profit seems like, you know, that's one thing that we're keeping an eye out on. But, you know, numbers are going on, and we had Info Edge, which reported its numbers a short while ago as well. And when you look at the numbers that have actually come in from the company, looking at the revenues, that's seeing an uptick of 14%. EBITDA is seeing a sharp jump up as well. Profits of the company are coming in at 16 crores, which is seeing a bit of a downtick on a quarter-on-quarter basis when you look at it. While in terms of the, I beg your pardon, year-on-year basis, while margins also have seen a uptick, and 32.4% is what the margins have come in at. But, you know, let's bring on board the Wholetime Director and CFO at Info Edge, Chintan Thakkar, to talk to us about their numbers. What are they looking like, and what should we be expecting in terms of the outlook going forward for the company? Chintan, thank you so much for joining in with us this afternoon on ET Now. You know, I want to just start by talking about how have the billings actually tracked during the quarter gone by, especially in Naukri. What is that looking like as of now?
Yeah, no, you are right. I think the right way to really look at our numbers is not really going by revenue, because revenue by and large reflects what has happened in the prior quarters, right? And then those numbers are looking great. But when you look at, you know, from the billing standpoint, we are kind of almost flattish, you know, this quarter on a YOY basis, right? Although some of the smaller businesses that we have, like 99 Acres, Shiksha.com, Jeevan Sathi, they all have grown. It kind of offsets some of the, you know, negative growth which we have witnessed in the recruitment business, which is the larger business for us, right? So recruitment business is kind of about -4% billing. But, you know, the other business have kind of offset, and we have kind of ended up, you know, almost flattish. Having said that, I think we should also keep in mind that in previous year, you know, when we say YOY basis, there's a little bit of a base effect, because previous year we had grown, you know, on recruitment business something like 80%, right? You know, so I think you are kind of, there was a sharp jump. We are coming out of COVID, and you know, this is a growth now on the top of it, right? The reality is that last 2-3 quarters, the tech hiring is kind of slowing down. And you know, to keep a base of 80% jump of last year and then show the growth on the top of that, I think that has kind of grown, you know, a bit difficult. But having said that, yes, on the overall basis, at the total company level basis, because of the growth in real estate and, you know, some of the other smaller businesses, we have been able to keep the billing as is. We have reduced, you know, so optimized some of the expenses, particularly in 99 Acres and Jeevan Sathi on the marketing side. And that also has contributed, you know, to the increased profitability in our particular business.
Right. Good afternoon, Mr. Thakkar. This is Cheryl also joining in the conversation. And since you touched upon real estate business in your previous answer, let me actually continue asking you about real estate itself. Do you have to spend more now on marketing, given the fact that we're seeing a rise in competition in that particular area?
I think there's nothing that has significantly changed in past few quarters. There's competition always been there, right? And there are a few quarters where we'll spend, few quarters when they'll spend. So I really don't see anything significantly changing in terms of the competitive landscape or a higher increase in marketing spend just because competition is doing something. On the contrary, sometimes we take a call that if competition is kind of spending a lot of money, if we also spend, it just doesn't really benefit either of us, right? So so our general kind of trend and the strategy is to kind of invest a lot more on the product side, on the data side, rather than investing a lot more on the marketing side, on the advertisement side.
Right. Also I want to see, have you seen any pickup in the matrimony business? How is that doing as well? What are the trends that you're seeing there?
Yeah, as you may know that last year we changed our business model a little bit and we kind of made a lot of features which are now on a freemium basis, right? That helped us to get more engagement on the platform, and that was the objective behind that. And now that that feature is known and the engagement is is at a much higher level, we get a lot more paid profile, which increases our network effect as well. Now is the time then we start spending less money on the marketing. So if you see the trend overall last 2 or 3 quarters, gradually the marketing spend is coming down, and that has an overall positive impact on the cash that was burned in this business. So overall, I think our strategy seems to be working out in the direction in which it is we wanted it to go. Of course, it is still a lot more work to be done, and it is a work in progress. But so far, so good. We are kind of encouraged by whatever numbers that we are seeing on the matrimonial side.
Right. Let's go back and let's talk about Naukri itself, because yes, you all have also noted the fact that IT hiring has been pretty slow. By when do you expect to see recovery in that particular area? And also, if you could talk to us about how non-IT segment is holding up, and if allow me to just add in one more in that, if you could tell me billing growth in recruitment, are you expecting it to be around like 10 to 15% for full year then?
Well, those are some of the harder questions. Non-IT, if you look at it in Q4 or even Q3 last year, was doing much better, and that kind of taken care of the slowdown in the IT hiring. Non-IT hiring is even in this quarter is much better than what the IT hiring has been, but it wasn't sufficient to finally offset the entire degrowth on the IT hiring side, right? So non-IT hiring is doing better, but that also seems to be slowing down. If you look at our July job spec index, it's showing a quite negative trend on IT as well as on non-IT. However, we also think that July there could be, there are a lot of disruption that happened in the month of July because of monsoon and variety of factors. So that may not be the only indicator or the right indicator. But the trend of kind of a sluggishness in the overall recruitment recruitment particularly on the tech side, I think that continues. It's very hard to say that when it will kind of bounce back. We think that it's probably the Q2 is still the trend is this the same as what it was in the previous quarter. So maybe this quarter it maybe looks difficult, but still many days are to go. Most of our billing happens in the last few days of the quarter, so it's very early for us to kind of really give us any outlook on that. Long-term outlook, I think that remains steady. Whether if the overall there is a growth of jobs in the market, Naukri is a place where people find the job. So I think it will definitely reflect the trends which are there in the economy.
And Chintan, just lastly, putting in two questions in one in terms of the revenues. Yes, you said revenue is not a factor that we should look at, but as an exit rate, can we expect a double-digit revenue growth for FY24, and this 3% growth we've seen on a quarter-on-quarter basis this time is just a couple of quarters incident? And also in terms of margins for the full year, could we expect it to continue in that range of 38 to 40%?
Look, from the revenue standpoint, it reflects what has happened in the previous quarters. So if this quarter billings are on the lower side, it will have an impact in coming next 2 or 3 quarters. So definitely from that standpoint, revenue you will see a kind of a trend line which might go down, which may go down. On the margin side, I think given that we have a very high margin business, even if we are if we end up let's say flattish in terms of how the the top line growth would be, it will probably impact by 5-6%, 500-600 basis points in the margin. If you look at the cost, that's in this quarter the cost has gone up by about by about 5 or 6%. But if you look at even recruitment business, the cost has gone up about 13%. And if that cost trend continues, and even if you are flattish, there will be a kind of a delta, to match that. But we would still remain in a high margin business, because our margins right now in the recruitment business, real cash margins are around, 57, 58% kind of a margin. So it's a very high margin business. So even if, when there is a short term impact in terms of top line, the margins may not have that great an impact.
All right, point taken. Thank you so much, Mr. Thakkar, for actually talking about Info Edge's earnings in the quarter gone by. What are the factors at play and where you see the company headed from here on, and the various business segments also headed from here on. And that was Mr. Thakkar of Info Edge. But yes, lots of stocks to talk about. Ace Construction's earnings just hitting the screen. As you can see, the stock is trading higher by about 0.7%. Revenue for now looks pretty healthy. Coming in at around 30% jump coming in for revenue. PAT also 55% jump for Ace. But that's not the only stock that we are going to talk about. Let's talk about stocks that are buzzing on technical front as well. We have Vinay Rajani joining us on the show. Very good afternoon to you, Vinay. Thank you so much for joining us on ET Now. And the first stock that you're going to talk about is Bank of India. And what exactly is happening in Bank of India and also the rest of the PSU pack? They're just soaring higher. Do you think it's sustainable?
Yeah, thanks for having me on the show. So yes, entire PSU banking sector has been outperforming, and we have seen some good breakout on the ratio charts of PSU bank against the Nifty. So there could be a continuous outperformance from the PSU banking space, and many of the stocks from the PSU banks have already come out and posted a very good result. So that is also supporting. So technically also there is a support, and some results are also positive. So basically some stocks like Bank of India, Union Bank or Bank of Maharashtra can continue to do well. So they can outperform the Nifty as well as the private sector banks. So we believe that Bank Nifty is headed for the Bank of India is headed for the next target of 92, and the support which I see for the Bank of India is 82. A positional trader should have a stop loss of 82, and immediate target can be seen at 92, and once 92 is taken out, we can expect a target of 100 rupees also. So overall on the medium term charts there is a big breakout, and this stock not only for the short term but for the medium to long term also one can accumulate for the long and one can do SIP also in this kind of setup. So not only for short term traders but positional traders, for investors, this is a good stock to remain invested, and I think this outperformance will be there from the PSU banking space, and Bank of India is one of the best stock I look on the PSU bank's radar.
Okay, that's Bank of India for you all, and Vinay's view on Bank of India. But let's move on, talk about Ashoka Buildcon. This one is in focus after it reported a weak set of numbers. Yes, revenue saw a mild growth of 3% on a year-on-year basis, but the weakness we saw coming in was on the operating performance front, where the EBITDA came in just at 24.5% versus 25.8%, so a contraction of 130 basis point in terms of the EBITDA margins over there, while the EBITDA saw a decline of around 3%, 2 to 3%, while profits were down by almost 49% as well. So clear pressure that has come in on the operating performance of the company. The profits of the company also saw a decline coming in on a year-on-year basis, and that is why the stock is down and out in trade, 4.5% downtick as of now.
All right, moving on then. Vinay, back to you. Bank of Maharashtra, you did speak about Bank of India. Bank of Maharashtra, similar charts?
Yeah, not exactly similar, but it is actually the charts are better than the Bank of India. So Bank of Maharashtra actually took a lead when PSU Bank started outperforming. Bank of Maharashtra was the one which took the lead and outperformed the overall banking space. So it is the mid-cap PSU banks and looking much stronger than the other PSU banks as well as the private sector banks. So it is still down from its all-time high. All-time high was way above from this level. 72 was the all-time high, and right now stock is trading at 37. So I think worst is over for the PSU bank sector, and the way they have been moving on the medium term charts like weekly charts, they have been forming higher tops, higher bottom, and stock is placed above all important moving averages, which indicates that bullish trend is intact on the short to medium term time frame. So overall, I believe that 37 is no doubt from the recently it has risen a lot from the lower level, but still there is a good upside from here, and we could see a good the upside target of 45 in the coming months. So positionally as well as for the short term, this stock looks very convincing on the medium to long term charts.
Okay, surely keeping an eye out on that one, but let's also mark a lot of numbers coming in. So let's mark dredging curve first. While I was talking about dredging curve, look at it, the company has actually swinged into a profit this time of 15 crores versus a loss last year. Revenue seeing a decline of 39% and coming in at 204 crores. But profit surely seeing a sharp improvement coming in on that front. Margins are something that we are watching out for as well. But Dredgen Corp surely saw a spike up after that. After the company's actually swinged into a profit this time versus a loss last year.
Dredgen Corp, which has actually saw a big jump after it actually reported its numbers, but that's not the same when it comes to BEML, because look at the line graph of BEML. That particular counter also has declined, and if you look at the company, it's posted a loss of about 75 crore rupees as against a loss of about 82 crore rupees. That's BEML for you. The stocks did see a dip initially. If you look at the revenue, is 577 crore rupees as against 669 crore rupees. So that's the way how BEML is trading right now. We are awaiting for operating performance of BEML. But yes, the loss continues to hold on, 75 crore rupees loss as against 82 crore rupees loss, and revenue is at around 557 crore rupees versus 669 crore rupees, which is a decline on a year-on-year basis. So that's why you can see BEML actually declining in the trading session.
Absolutely, but let's move on and keep it going with more stocks that are in focus. And Ashesha, HCL Tech, this one is not an earnings candidate today. What is the news flow here?
Yes, this counter is in focus on the back of an order win. In fact, it is gaining nearly 3.5%, holding on to its morning gains, and the top gainer on the Nifty 50 index. Now, the company has signed a new mega deal with Verizon. The global strategic partnership is for managed network services. The deal will have positive revenue impact for the next 6 years. In fact, on the back of this, we also have a couple of brokerage notes that have come in. Morgan Stanley, for instance, says that the large deal signing lowers the risk of FY24 revenue guidance that the company has given. They estimate that this deal itself has the potential to contribute nearly 1% of their FY24 full year revenue guidance. And HCL Tech can reverse some of the recent underperformance. In terms of stock underperformance is something that it can reverse. Investec, meanwhile, has also come out with a note where they say that this deal could aid revenue growth to the tune of 2.7%. So yes, a positive news coming in. Order win that has come in. The stock is gaining 3.6% higher in trade for HCL Tech.
Right, that is HCL Tech for you. But Vinay, coming to you, Tata Com, how is the charts looking for Tata Communications now?
So Tata Communications, the primary trend was up on the weekly and monthly chart, but recently we saw that stock hit an all-time high at 1821, and from that level it corrected towards the 1654 odd level. So this is a normal running correction in the overall bullish trend. And what we saw is, yes, in yesterday's session, it made a low at 1654, which was the change of polarity level where previous top support was there. So it bounced back today. It is up by 1% today. But looking at the primary trend and after result was subdued. But then also stock continued to move up and made an all-time high. So I believe that considering the overall trend, considering the setup of indicators and oscillators and moving average setup is quite well on the weekly and monthly chart, I believe that this kind of large cap stocks can continue to do well. And there is a strong support around 1600 odd levels. Keeping that stop loss in mind, positional traders can remain long. And I'm expecting that the recent high, which was there around 1820, can again be tested, and stock can go much beyond that. So I believe that first target could be 1820, and in that case, if that target achieves, we have to trail our stop loss on the upside, and we have to keep it on the trailing basis. So overall setup is quite good, and I'm expecting this stock to continue to outperform.
All right, and that was indeed the last stock of this edition of Market Fatafat. A lot of earnings, a lot of managements, but with that we wind it out. In fact, for this week's edition also of Market Fatafat. So it's a goodbye from Vinny, myself, our producer Soma, as well as Snehi, and our director Trevor. Thank you so much for watching us.